One of the biggest questions we get from high-earning business owners and corporate executives is how can I be saving more money? If you look at the 401k limits for 2020, you can put $19,500 into your 401k pre-tax. While that's a good amount, depending on your expected retirement lifestyle, that may not be enough for you to be able to live in retirement comfortably. So the question is, how can you be saving more? Now we have a couple of options, and I will preface all this by saying you have to be very careful with all this. I'll kind of touch on that with each of these. So please work with a financial professional or tax accountant before you do all this. But here's some options to think about. The first one is a health savings account. And given the cost of healthcare and retirement these days, given that we're living longer and nursing care is becoming more and more expensive, it's really important to think about your healthcare costs in retirement as a separate expense need other than your normal living expenses. So the great thing with a health savings account, an HSA, is that when you take money out of the account for medical purposes, you don't have to pay any taxes on that. So a lot of times, to the extent you have an HSA available to you, we recommend maxing that out so that when you're in retirement, you have a dedicated pool of money to be able to pay those medical expenses. Another strategy that we sometimes look at is what's called a backdoor Roth. Now, if you're a high earning individual, you're likely over the limits where you can get a tax deduction for making an IRA contribution. But that doesn't mean you can't contribute to your IRA. You have what's called a non-deductible IRA contribution instead. And what we can do in certain circumstances is we can actually take that non-deductible contribution to your IRA and convert that to a Roth. And the benefit of that is Roths grow tax-free, and when you take money out of a Roth, you don't have to pay taxes on it like you do out of a traditional IRA. Another strategy that we look at sometimes, similar to a backdoor Roth, is what's called a mega backdoor Roth conversion. And here what you're doing is you're putting after-tax money into your 401k plan. So we know that for 2020, the limit for pre-tax contributions to a 401k is $19,500, but you can actually put up to $57,000 into that 401k plan between your pre-tax contributions, your company match, and after-tax contributions. Now the good thing with this is if your plan allows it, or maybe you have to do this after you leave, is to the extent you put after-tax money in, you can do what's called a mega backdoor Roth, where you take that after-tax money and roll it directly into a Roth IRA once you leave that company, or if you can do it while it's allowed while you work there. So that could be a great way to save a lot of extra money, and you get money into a Roth for the long term. And then the last thing we look at is the good old taxable account. This is the brokerage account that you can open up at Schwab or Vanguard, and you put money into it. And the key here, though, is while you can put unlimited amounts of money into a taxable account, you want to make sure that it's invested in a tax-efficient manner. So investing in passive index funds that don't pay capital gains distributions, owning municipal bond funds, things like that, to help make sure that while you're investing a lot of money in there, you're not having to pay a lot of taxes year after year. Now we've actually created a guide looking at all these different strategies and going into it in a little more detail. So if you go to our website or look in the link below this video, you can download our guide and we'll run through each of these strategies in more detail. And obviously, if there's anything we can help you with to make your life easier and plan this all out for you, we're here to help you.